This is such a predicament of serious research. I want to call your attention to the latest Earnings Playbook report. In this report, we really focus in on commodity pressures and supply chain bottlenecks. This backdrop makes it potentially a very tough earnings season in the making, maybe more guidance than actual results. Uh, if we're right with so much of the headline risks, we think really focusing on your earnings risk could be incredibly important in this period. A way we do this in this report is to look for earnings torpedoes and fallen angels. Torpedoes, of course, are potential downside risks, while fallen angels are potential bottoms in shares. So the idea with the torpedo is that what are those firms with very aggressive forecasts and where there's a ton of conviction? In other words, not only is the outlook rosy, but we're sure. And then the second part on fallen angels is the exact opposite, which is growth expectations have collapsed to such severe levels that where we're at is that we're now seeing the consensus numbers converge to that low end. So we think this is how we frame out earnings risk in the upcoming reporting period. In terms of groups where the expectations are most aggressive or potentially most discounted, financials, energy, and transports represent the most aggressive forecasts. We completely understand why energy forecasts are high and likely to climb higher. Take a look at our recent commodity report. On the other hand, we think that somewhere between the central bank actions coupled with rising oil and fuel prices, financials may struggle here as the yield curve continues to potentially fade. On the other hand, we've got fairly benign expectations for healthcare, staples, and services. We really underscore the staples risk given the grain, wheat price spikes this period. So there is margin pressure. Examples of that we went into a little further in the report. In this case, we flag the food groups and focus on their margins, which are secularly high. The risk is as input prices continue to rise, which they have been, we'll see some potential risk in the announcements coming out this in the weeks to come. And conversely, we suspect that drillers will have fairly good news given the commodity moves. And ultimately, we think we will see more business coming their way. So we expect more positive earnings surprise, or at least guidance. This is a look at the cover of the report, Earnings Playbook. Feel free to call us with any questions as you may have. Thank you.